Hello, everybody. Welcome to Friday. As always, I'm excited to be here with you and have the opportunity to talk about what's going on in the market, look at some of the positions that we have been paying attention to, and hopefully have an opportunity to take a look at some things that you're interested in as well. Uh, uh, sorry, I was just reading a comment from Gib. I'm not sure exactly what you mean by the two questions you always ask yourself, but he says the two questions I always ask myself is yes. Again, I've got to admit to a little bit of ignorance here about exactly what you mean. Oh, okay. So can I see and hear? Gib, you through me. I appreciate that. Thank you for giving me my audio and my visual check. And to that point, in terms of interacting with me and the group, if you like to use the questions panel, you certainly can. A lot of you that are here seem to prefer working that way, and that's no problem. I pay attention to that throughout the course of the webinar, and we'll use those comments and questions to fold into our discussion as we move into the next hour. If you'd like to go ahead and turn on your microphone and speak up, I do like to leave everybody unmuted on my side in the GoToWebinar software. And that way, if you have a comment or a question, you can go ahead and just turn on your microphone from your side and go ahead and speak up. That way, we can have an open conversation and discussion with the entire group and benefit from each other's perspectives. And that's always a lot of fun as well. So with that said, how's everybody doing this week? Gibbs doing well. That's outstanding. I hope that's true for the rest of you as well. It's been an interesting week. Market has been rallying lately, and most recently with sorry, let me get to a better chart here. There we go. I'll just close this tab because I don't need it. The last week or so is the market has been kind of trying to bake in the expectation that the Fed is going to start lowering interest rates. Well, the big wigs at the Fed right now are in Jackson Hole on their annual retreat, and this morning apparently Mr. Powell, the Fed chair, did signal that those rates are coming, even if he declined to say when or how much. So it looks that's something that the market is using to rally at the moment, even though it's a little bit off the peak, but it's still nearing its all-time high in the neighborhood of 5,700 right now, as far as the S&P 500 is concerned. So that's this movement over the last couple of weeks. There was a point in time here where a lot of people were starting to wonder, how bad is this? Boy, this is starting to hurt a little bit. But we've almost recovered the entire distance of that decline and reclaim most of the losses in the index. So that's generally been pretty positive for most stocks as well, and certainly worked in favor of some of the positions that we've been working with from the put selling side. There's only, sorry, Gib, this is another comment. Great. Jump in VIX made for some good trades. Yes, it did. And if you're not familiar with the VIX, thank you for opening the door to that. I really appreciate it. That's a great comment. The VIX is an indicator that I really like to pay attention to. I don't necessarily look at it every day, but as what a lot of people like to call the fear index, the volatility, the VIX is a good way to try to pull a little bit back away from the market and put market conditions into the context of emotions. The movements in the VIX tend to be the opposite of what in direction in terms of what the index does. It's tied to the S&P 500. That means that when the VIX is going up, the market is usually going down. And when the VIX is going down, the market's usually going up. The extreme ends of the VIX tend to be the signal areas where the markets are starting to reach extremes and where reversals aren't necessarily guaranteed, but often happen. So I'm expanding my chart here just to show a little bit more time. Let me even, well, let's zoom in here really quickly. Excuse me, beginning of the month when we were in the middle of this that rapid decline that we were talking about, that included really a push here from the VIX all the way into some levels that haven't been seen in a lot of years. And that's kind of what put a lot of people on edge. But at the same time, that really just pushed the stock market down low enough that some of the stocks that we've been following, not only did they offer some nice opportunities to buy the dip over the last couple of weeks, but from a valuation standpoint, there's a number of stocks that are now sitting at some really interesting valuation levels again. And that's something that I like to see as well. That opens up the door for more opportunities to place some good income generating trades. The VIX is an interesting, going back here, this is an interesting tool to look at the market with. And actually, that's a month. Let's not do quite that much. Let's do a week. There we go. This is a little bit better. This gives us a way to look back at the history of the VIX a little bit and try to put its movements in a little bit of broader context. And we can see that some of the peaks, there's this, if you read a lot of stuff about some of these indicators, a lot of so-called experts will say that the reversal signal for the VIX is when it crosses above 20. Well, we can see that that actually happens quite a bit. And sometimes, yes, it does signal clear declines in the overall stock market. This is a really good indication. This is the pandemic. And that was obviously very short-lived as it came back, and the VIX declined. That meant the market rallied, and then it found this bottom at this point and pushed back up again at the beginning of 2022 up here into about 36. Which prompted a drop into the most recent technical bear market. This wasn't accompanied by anything like deflationary economy or anything like that, but the market did increase in volatility for most of 2022, and it took until later in the year before it started to recover. And then, sorry, I need to switch my color again, and then began to rally again. When you see it kind of start to base like this, when the VIX is just kind of in a trading range between lows and about 20, this kind of a consolidation period, these are usually pretty typical of bull market periods. Let me clear this out a little bit, and we'll move this back in time, and you can see, in fact, if I extend this, let's go to a month now. There we go. Here's basically the entire 11-year period from 2009 to 2020 when the pandemic hit. The VIX was consistently, just kind of gradually tracing down here, below 20, and that was, gave the market. We did have some occasional peaks where it pushed temporarily above 20. This is why I say that you kind of need to be careful about assuming that any single point, especially on the high end for the VIX, is a signal that the bear market's coming. Extreme spikes tend to be maybe a little bit more indicative, but definitely not guarantees. But when you see these consolidations, these are going to usually be reflective of bull markets, and it's when you see significant sustained increases in the VIX out of these ranges that you become a little bit more likely to see a significant reversal. So VIX is interesting if it does nothing more than to put a little bit more context around the way that investors are reacting from an emotional standpoint. As I mentioned, this is why it's called the fear indicator. But it's something that it's something that kind of makes sense if you think about it, because if investors are starting to really panic, and a panic is something like this, then that's when a lot of them start to sell. And so that's where you see these spikes in the VIX. And then whether or not it snaps back quickly like it did now, it really depends on how quickly people recognize whether or not that's an overreaction, or if maybe some of that negative movement is justified. If it is, then what you'll usually see is capitulation, where it stays above this level for a more extended period of time. Let me go back here again. I'm going to go to a month for a moment just to try to accelerate how fast I can move from one period to the next. Here we go. Now let's go back to a day. They'll go to a week. Oh, my stars. There we go. Didn't let me stay zoomed in. Okay, here we go. This one, now that I'm looking at, here is the end of the bull market in 2008, start of the financial crisis, beginning of the Great Recession, right? VIX spikes again all the way up above 80, even above that latest peak that we saw, which was in the mid 60s. But it stayed here. Remember, again, we're looking at weekly charts here, weekly candlesticks, excuse me. This started here in September, and it persisted all the way until the beginning of 2029, and didn't really, even though it started to drop, it still remained above, some of these levels that are generally considered as signal points for generally bearish or bullish momentum. Stayed above all of this area through the majority of 2009. And that's pretty consistent with the length of the bear market. It took about that long for the bear market to resolve itself. And so this kind of gives you an idea. Are investors still fearful? Are they maybe reaching a point where they're becoming more confident, more bullish? The extremes in the VIX are an interesting way to try to gauge that. So, sorry, Antonio, that is when Buffett put some of his spare cash to work. Yes, that is exactly right. That is the contrarian, value-oriented mindset that is that has proven itself over and over again through time. Now, I hope that's helpful. Any questions about that? Any other comments? In fact, to Antonio's point, Mr. Buffett has gone so far as saying that when everybody else is selling, that's when he starts looking for opportunities to buy. That's classic contrarianism. All right. Comcast is, I've pulled up the chart here for this stock because this is the one that I have an open put sale on. It's ready to expire today. The stock is right in between $39 and $40. And just to go and take a look at the trade, here's the position. I sold the $38 strike price and brought in about 2% for that time, 75 cents per share on that trade. And so with the stock now at about $39.50, it looks like it's in a pretty good position for me to expire worthless. And as all of you know, that's kind of the normal mindset for the way that I like to approach these trades. Give me just a second here. I didn't have an opportunity to get logged into all of my systems. I apologize. And I was also a little bit late getting in this morning into the webinar because we had got notice that we had a family friend pass away this recently, and had to deal with some of the things that are associated with that. 009558. Going back to the VIX, Gibbs says usually the higher the VIX, the higher the premiums. That's also true because volatility is increasing. When fear is increasing, that pushes the volatility of stocks higher, and that obviously impacts the implied volatility of the options that we like to work with. And so that's usually where you are able to capture larger than normal premiums, to be sure. That is absolutely true. And so when you combine that fact with the idea that now if you adopt the same mindset as Mr. Buffett, everybody else is selling, now maybe that's an opportunity to buy. Number one, as a put seller, I can capture larger than normal premiums. Number two, those larger than normal premiums also allow me to be a little bit more conservative if I choose to in terms of the strike prices that I select for my put sales. Instead of maybe being at the first out of the money put option, for example, I may be able to go 2 or 3 strikes out of the money in those cases, and not only maybe set up a higher probability that the option expires worthless, but more to the point of what I care about, essentially set an even better bargain price for myself if I am assigned. Jay says there is a risk of a big drop. That's true. We're talking about bear market conditions in those cases, and that's why I always say that if you're going to be selling a put option on any stock, I don't care what the market condition is, you need to understand that there is a potential that you're not only going to be assigned the stock, but that the stock could drop much further below the price that you're assigned at. And so you need to decide whether or not that's something you're willing to work with or not. And if you aren't, it doesn't mean that you can't sell puts. It does mean you're going to need to manage them more actively. If you see the stock starting to move strongly against that position, you usually want to be nimble in that case to try to buy it back as quickly as possible, minimize the loss. You probably won't be able to avoid it, but you should be able to minimize it. All right, so here's Comcast 3965, as I mentioned, in a good position to see this expire worthless. But this is, I'm going to have to, oh, no, here we are. This is the contract that I'm working with. Obviously, there's an interesting possibility and opportunity here to, buy it back for a penny. Last trade was at 2 cents, and I sold. Remember, I brought in 75 cents here, so this is an opportunity to really capture most of the premium if I wanted to buy it back before the market closes. That way, my capital that I used to reserve the trade, I only sold one contract here, so $3,800. That $3,800 then comes back. It's back in my account immediately if I buy the option back. As things stand now, I'm going to let it expire worthless. That means that capital won't be released and won't be available for new trades until probably Monday or Tuesday at the earliest. Now, I'm comfortable with that, but there is an advantage in thinking about, well, if I still like this stock and I can buy it back now, can I redeploy the money quickly in a way that makes sense? Here's if I wanted to roll up a little bit. Here's 55 cents for the 39.50. That's a little less than 1.5%, but that's for 14 days of time, which isn't terrible. We also lose the 50-cent increments in strike prices after 2 weeks. So now we're at 39.50 cents for 21 days, which I don't love. And here we go again. Now we get 59 cents for a month. So it could go out a month on this one. 39.50 get 83 cents. That's interesting. Or 62 cents for 39. This is a good example of what I meant about when implied volatility is starting to increase, you start to get some of these larger premiums. A larger premium doesn't just mean that you stay as close to in the money as you can, or stay at the closest out of the money contract. It means you can evaluate whether or not you want to make the trade more conservative. 39 is certainly a lot more conservative given the stock's current price at 39.63 than 39.50. So going an extra strike price out of the money, still bringing in 62 cents for 1 month, a little bit over 1.5%. So that's interesting. Now, for some of the people in our group, that may not be enough, but for me, that's enough to be functional. I don't hate that idea. That's not terrible at all. I've been talking a lot. Let's throw this out to the group. What do y'all think? What are some of your thoughts, whether you're in Comcast or not? Antonio, I see you turned on your microphone. You got a comment? Okay, let me try something, Antonio. I don't know if that makes a difference. Try turning on your microphone again.
Can you hear me?
Oh, got you now.
Oh, okay. I love the trade. I think as far from the swing trader perspective, I see it. I see the Comcast going up.
Yeah.
Everything points in that direction the way it's trending, even though its RS relative strength line is low, but it's in the moving averages. I mean, it likes to ride a 9-day, and it stays close to that 21, and now it's staying
Yeah.
above the 50 for quite a while, which is well, when I say quite a while, that's a week or a week and a half.
Right. But this is a very, very good classic stair step pattern, right?
Yeah. Yes.
That we like to see with upward trends. And that means that even though it's been coming back off of this peak a little bit, what again, we can kind of follow this back here. Here's a pattern of higher highs. Now, this is a little bit below this one, but this pullback is certainly not a guarantee. But if
No,
if we see another bounce,
you
and
keep looking at those. Sorry,
I'm
I
gonna
was saying you keep looking at the double bottoms, and as you're saying, there's it came down, keeps going back up, and now it's just staying there.
right. And so, you know, this line, I'm going to go ahead and call this 4150 just to be conservative. But if this pushes above 4050, you know, now we've got to break above this pivot high, and that should give it some more room. Now we've got the 200-day moving average not far away here at about 41, so you need to contend with that. But again, in terms of signals, if we're talking about what it's going to take to sustain this upward trend, you know, a push above 41 would certainly be a very strongly bullish indicator, to be clear. And that would, I would expect the stock at that point to extend this upward trend right now even further. So yeah, I think Antonio, you and I are in agreement as far as the way that this is setting up right now. Jay says I did a buy right bot at 39.24, call sold for 79 cents. Nice. And that expires next Friday. That's, you know, this is the calls at $40, and that I love that trade, Jay. This is a really, really good example of taking advantage. And again, we can recognize that you're putting in you're putting a cap on how much gain you're going to get, right? Excuse me, because that's at 40. You're not going to make anything above 40 if the stock suddenly goes like this, right? But then again, you're talking about you're talking about a trade that's covering a very short period of time, and buying it at 39.24, bringing in 79 cents of income. That's nice. That's a very, very good overall result. Let's just do the math on this for a moment. Let's see, 39.24. If you get called out, then you're going to make 76 cents just on the exercise. Yeah, the percentage is nice. Absolutely. 76 cents plus the 79 cents that you brought in premium, there's $1.55. So if we divide that by 39.24, 4%. If anybody has a problem with 3.95% for less than a month, then there's other conversations that need to be had. Because no matter, sometimes you can certainly get more than that in a similar kind of a time period, but just in terms of income generation, this is all Jay's doing is picking up this is a really great example of picking up the low-hanging fruit of the market. It's just been sitting there, and if you like the stock anyway, why not do it? You picked it up with the put sale, or excuse me, I apologize. You picked up that low-hanging fruit with the covered call after you bought the stock, and the capital gain is just a little bit of extra cream on top. So I like it.
Absolutely.
Yep. All right. So that is Comcast. That is that position. There are some other trades that are coming up in the next weeks ahead. Excuse me. But the next week, there's only a covered call that I was able to place earlier this week on Barrick Gold, which is a position I've held for a while. Let's just take a look at this one. I sold the 2050. Now this is the same price that I was assigned at, but if precedent holds, you recognize that I don't mind doing that on a lot of these stocks, even if I've been holding them for a while, and I've been holding Barrick for a little while. I don't mind selling the same price I was assigned at, because I've usually also had an opportunity to generate good income just from the put sales, from different covered call opportunities, as well as the dividends. So let's take a look here really quickly. And the stock as of now is at 2058. So if it continues to hold this pattern, which kind of doing the parabolic thing, Antonio.
Speaking of parabolic, I had Wolverine subject for you guys today. That looked good, but today's action at 7.5. I'm on the right 7.5% today. I think it went up. Is not good. That makes it extended. Yeah.
Wolverine worldwide.
They make the Merrell shoes and a few other things. So, but yeah,
Gotcha.
their action today is wow.
Yeah, big jump today, and after earnings as well, by the way.
Yeah.
So something is giving the market some momentum here to work with, which is interesting.
Well, they came up as I'm looking through the swing trader stuff, and I'm going, oh, that's a nice one for the investive group. No.
And again, this is one I have not done a review on, but we got some income coming in here from dividends. Let's see, 10 cents though. Been pretty consistent, it looks like.
Yeah.
Yeah, 40 cents per share on a $13 stock. That's not terrible. That's 13.43. You're talking probably about 3.5% on the dividend yield. Just if the math I'm doing in my head is
2.97.
3.2.
Okay. The screen I'm looking through that on the that I scanned through it tells me 3%. It's a little off.
That's okay. If we want, and this one is unlikely to be exact either, just because of the way that prices vary, right?
Yeah.
0.4 divided by 20.57, 1.94. Wait, that doesn't sound right. 0.4 divided by 20. Well, maybe so.
Yeah.
I'm sorry, I'm thinking Barrick. 1343. Oh, geez. 1342. Let's do that one. There we go. 2.98. So, yeah. So 3% roughly. That's not a terrible dividend by any means. I can't speak to whether it's a good value or any of those kinds of things or what the fundamentals are like. But this is a strong reversal.
Yeah,
it was
a powerful trend. Stock. Yeah.
And that's got some momentum. I mean, it's gone all the way from 750. Here's a peak at 15. Drop back to strong support around 1250 with the rally that we're seeing right now. Not a recommendation to buy or sell, although Antonio may say otherwise.
Oh no, it's just trade talk.
This is also, look at this. This is a break above resistance. So if we want to talk about technical signals, if this pattern holds and say Monday, Tuesday, we see some movement like this, where it continues to hold above the 20-day moving average, that would be confirmation of that break. That may have some momentum all the way up here to 15.
The one I do have for you though is, and I will, to disclose, I did open a position this morning in VST.
Okay. Vistra Corp. Again, keep my coward's door swinging. These are not trades that I've been paying attention to. These are all interesting stocks, to be sure, and so some things to think about here. But another one that's it's following a long-term upward trend, but we had a pretty strong trend against that bullish trend, right? That's a pretty strong pullback, and it took about 3 months.
And it goes parabolic. It is coming back.
Before it found bottom at 65. And yeah, this chart doesn't quite look as, parabolic as some of the others we've seen. But to be clear,
you see the support at 70.
Redraw my lines here. This is what, 60, maybe 67, call it that. And from there, it's rallied and now it's sitting at 85. That's more than 25% in just a few weeks. That's parabolic.
As of March 4th, I think it closed at 57.75, and it's not reached that level below 50. It hasn't gone below 57.50 since that time. And then it goes up and comes back again. I always remember Buffett. 80% will get 80% of the stocks give back 50%, and 50% of the stocks give back 80.
There you go. So that's again, could be very interesting. It is still following that. It does look like it's coming up on some resistance right now.
What are the options for this? That's one thing I don't look at. And I don't understand options as well. I do like these that Comcast one, and I do like your put sale, and the covered call is awesome.
Right. So that all of these, from a technical standpoint, there could be some interesting things here, especially if we see this continue to push above 85. But now it's a great question. Let's go ahead and take a look at the options on this one. Again, no recommendations here, just food for thought. Energy company, renewable electricity, and independent power, which is interesting. Okay.
1% just over dividend yield.
Is that right? I'm sure that's right. I have no reason to doubt you. Yeah. So not a huge dividend, right? But they do pay a dividend. That's the more important element for me in terms of whether or not I'll consider it, because the other income comes from the put sales and the covered calls, etc. But here's 220 for 1 week at 85. That's interesting. Let's think about that one for a minute. Sorry.
The other metric I looked at was the cash flow, and they're healthy.
Thank you.
Only thing it doesn't have is stability. Earning stability is still not as in that steady part, but it changed to upwards back in mid 23 or something. So it's all good.
So this alone, remember, this is a 7-day trade. That premium, that 220, is 2.58% for 7 days. Again, this is interesting. And if you annualize that, 2.5% for an entire year, you can multiply that by 52 weeks, right? That means that you could repeat this again and again and again, which you're not going to be able to do. But if you could, you're talking about 134% on an annualized basis. I'm not saying, when I do this part of the evaluation, this is never about saying that this is what I think you're going to be able to get. This is just to try to put this 2.5% number in a larger context. Because so many people tend to dismiss what the power of what these income trades can do, and if you can repeat this kind of over and over and over again, You may not get 2.5%, but if you can get 1.5% consistently, monthly, weekly, bi-weekly, whatever the number is, you're still well ahead of the game. And so this is why I like these so much. Even, good heavens, with implied volatility this high, it could still, you could go all the way down to 83 here and still be interesting. $1.35. On the 83 strike, you're still at 1.62%, again, for 7 days, making it quite a bit more conservative because you're 2 more strikes out of the money. That's 84.5% annualized. Not terrible. Here's $1.65 even for 82 if you go out an extra week. And if I compare some of these numbers against what the stock is doing now, you know, here is let's see, 84, 85. So, you know, 82 is probably right in this range. So right about where some of these peaks have been, this is where I would expect immediate support to be right now, is probably in this 82, 81, $50 range. We've certainly got some strong support at 80 as well. So if we go back here, let's extend our strikes a little bit and see what we get from those. 14 days, $1.30 for 81. You're still above 1.5%, but now you're doing it for 2 weeks with an even lower strike price. Wow, here's 2% for 3 weeks. All of these are interesting. Yeah, you can make, thank you, Barry. He says you can make in 3 or 4 trades what you would do with a CD, assuming the underlying stock doesn't crash. And again, you got to consider the potential for that kind of a reversal. But if the value proposition is there for this stock, maybe that's going to be something that's worthwhile. Covered call, Antonio, in the $95 range. Okay, let's see. So 84, 85. We extend this. Let's go to 24 strikes. So again, we're talking very short time periods. So you're trying to bake in as much capital gain here as you can. A lot of this, if you're trying to go this way, Antonio, I would suggest trying to think about how long you think it might take to do that.
The object now is that I maybe 1 to 2 months down the road, I think it might break its 95 mark.
Right.
But if I'm able to make that and still just get the contract and not get it called out.
Yeah. Well, and to that point, you know, again, talking about low hanging fruit, right? You know, this is a little over a month. This one is 42 days out. So you're 5 weeks and a little bit, but that's $1.60 on, you know, the stock's current price here is 84.78. So a little under 2% for that 5-week period. But to your point, you're bringing in some of that income and baking in, you know, possibly a $10 gain over the same period on top of that. So, you know, here's your upfront gravy. And you know, here's the cake. If you get this, you get the whole shooting match all together. You're just eating the cherry first.
And if you get called out, well, hey, you get called out on a good profit.
gosh darn it, I made $10 on an $85 stock. And if you go out a little bit further here, here's 28 days. So this is 1 month. Sorry, that was 42 that we were talking about, right? Yeah. So if we go out to 2 months, 56 days, this is a little under 2 months. 95, here's 270. So even more on that in that case. Give it a little bit more time. A little over 3%. We're not quite 2 months. Again, not horrible. And again, and you're giving the stock a little bit more time to develop that move, maybe. None of these are terrible ideas. It really just becomes about, you know, what is the flavor that you prefer? What is the variation that makes the most sense for what you're trying to accomplish with your investments? I love the idea, and this is one of the things, thank you, Antonio, I really appreciate this example, because this reinforces one of the arguments I've had with a lot of growth investors, where they say, well, why should I sell a covered call if it's just going to put a cap on how much gain I'm going to make? Well, this is a really good reason why, because you may still be able to bake in a healthy potential capital gain if the stock moves the way that you want. But in the meantime, here's 3% just waiting to be picked up.
No reason you can't rinse and repeat later.
Right. Practically begging to be picked up, for that matter. It's just sitting there saying, hello, here I am. This is cash money you can put in your account, which is why covered calls are so awesome. So, and very few growth investors seem to recognize that. So thank you. I appreciate that. This is a great example of that. All right. Just to check in on a couple of other positions here. We already talked about Comcast. Excuse me. Last week I placed a put sale on FMC. This was a stock in the materials sector. I went out a little bit more than a month on this, kind of broke my own rule, just because this is a stock that doesn't offer weekly options, and this was the closest to 30 days I could get. The next closest was 7 days out, and that one was not really very attractive. And this is a stock that lately I've become more and more interested in. So here we are. The stock is coming up towards 65. Again, for context, I sold the $60 put on this one, brought in 3.5%, and certainly there's nothing. There is no additional gain here that I'm talking about on this one, because this is just a straight put sale. So this is everything I'm bringing in, but so far this looks on track. Now to that point, let's check in on this one, because that's already $5 above the strike price that I sold.
Tracking a lot like Comcast in the same with the moving averages aspect. And right. Wow, what a great earning stability. We're quite good.
Here's $2.10. If our friend Joe were on this call, he would be screaming right now. I could not even monkey with the market right now, pay 70 cents per share and hang on to $1.40 per share of the premium that I sold a week ago, by the way. a little over a week ago on this one, and then decide if I wanted to maybe go up to 62.50, still bring in $1.15 on top of that, and that's still pretty healthy out of the money, considering where the stock is approaching 65. And if it pushes, be interesting to see what it does, starting next week. If it pushes above 65, then even this one would probably give an interesting opportunity to do the same thing, buy back before expiration, and then think about whether or not I want to roll up again, maybe here to 65. Joe would be all over this. That is very interesting. Nice movement on FMC, not something we usually expect to see with these kinds of trades, but that's nice. This doesn't expire until the 20th, so I've got a little bit of time on this one. This week's put sale on Bank of America, a little bit closer, still about, excuse me, still 3 weeks to expiration on this one, but I sold the $38 strike, dipping my toes back into the banking sector a little bit, and kind of betting a little bit maybe on buying the dip, but we're at a little bit below 40 at this point. So some positive momentum on that one as well. So that's interesting. All right, Antonio, thoughts on XBI Biotech? Whew. Let's take a walk on the wild side, shall we? Sorry, typo. XBI, there we go.
I've moved, I think, moved quite a bit of portfolio into the sector in different stocks, one or the other.
Yeah.
Even today, because I think the sector is the institutional money starting to move in.
Well, and certainly the argument to back that up is this: it's kind of followed the market's bounce and then shift back up above, right? So strong move to that upside. Let's take a look at, let's throw on an RSI on this one. Boy, I really need to change the defaults on this.
Yeah, it had changed to the 50-day, and then but it's been staying above its 200. It touched it, I think, back in late April, and
yeah,
hasn't seen it since.
Yeah, and we've got everything moving favorably on the RSI right now, but it's still not, still got some room to 70. Should be kind of the top end that we would expect to see on that one as far as the RSI is concerned. And it doesn't look like it really spikes above 70 that often, at least not in most cases. Here's a little bit back in 2021. And here's a temporary spike above, up here at the top. Again, the interesting kind of talking about, tops here, the interesting thing is going to be right here around 102. If we see a break above that, then I would say that there's probably some room to see this push above 70 again. And in terms of how far that might go, as always, let me just say again, not a recommendation to buy or sell. I've got to keep my coward store swinging. But let's go to 1 week. we get above 102. Let's see, what do we got? Probably just on the weekly chart alone, probably got some room up here to about 119. We kind of needs a weekly chart just to get back to a range that it's seen in the last couple of years. There might be some resistance around 109. It's based on this pivot low. But from 102 to 109 and possibly up to 119. I mean, that's $20 on a $100 stock. So, I mean, if we see this continue to push higher, there could be about between probably 8 and anywhere between 8 and 20% upside in the sector in general. How that translates to individual stocks is obviously another open question, but certainly looks interesting.
I think the 103 mark, if it powers through that, I think it's a strong metric for it.
Yeah, I think I would probably agree with that. It's certainly breaking out of a pretty solid consolidation range, right? And this is so far it could be establishing a new consolidation range, which is why this 102, 103 level that Antonio and I are talking about becomes so important. If it doesn't break out of this, then it just may be it may just extend this consolidation period even further. It may set up a new one of these, but with a little bit higher range.
Yeah, the hope is that the bottom range is 103. The hope.
Right. If it sets a new consolidation range even above that point, then the bottom would be here around 103, and then maybe the top is up here. That would be the setup for a new higher. Here's higher lows right at that point, and then you'd be looking at higher highs that would start to define a really useful trend at that point. We're not quite there, even though it's been rallying for the past month. This is not quite an upward trend yet, primarily because of we don't exactly have that confirmed pattern of a higher high along with the higher lows. So, which is ironic considering the amount how far it's moved. Sorry, that's not the last month. That's through the year so far.
It's got a cup with handle of a 22% depth and a 5% handle in 20-week period, which looks tempting.
Right. Yeah. And here's your cup. I'm just doing this to try to, and here's your handle. Very interesting. And yeah, you could probably put the top of the cup up here. That's okay too. I'm not an artist. I can just recognize the patterns and draw them roughly, but doesn't mean they're going to look pretty. All right. Thanks, Antonio. As always, I like that. That's pretty interesting stuff. Hope this gives everybody some food for thought. There's always interesting opportunities out there, and the way the market is setting up right now, it looks like we may start getting some more. I think we're the market is certainly pricing in and trying to bake in an expectation for the rest of the year. We'll see if it's able to follow that through. But if it does, that's certainly going to work well for our put selling trades, and then for the growth guys like Antonio and some of the others, there'll be there'll be some good parabolic patterns to start talking about as well.
The sales of homes was the other metric that I found was very powerful, because even though most people or analysts are thinking yes, and from what Powell said is today is that the interest rates are going to go down, and now we're seeing increase in house sales, and knowing that interest is going down, that really to me sounds like a very strong economy.
It sounds very bullish, and the confirmation on that side would be if you start, there's a lot of inventory in the housing market right now. The average, the what is considered a healthy housing market, if I understand the numbers correct, is about a 3-month backlog from the time a house is listed before it's sold. And right now that backlog is about 4 to 5 months. So if we start to see that backlog start to decline and start to approach some of those more normal levels, or even go below it, then I think, Antonio, you'll be exactly right. So we will see, obviously, but all of this is really interesting, and just gives us that much more information to work with as we're trying to make the decisions about what we do with our investments in the future. As always, everybody, thank you for your time. I do appreciate your participation and your comments. If you have any questions between now and next week, don't hesitate to let me know. Otherwise, we will talk again next time. Thanks, everyone.
Cheers.
See ya.